What if you could actually protect the value of your airline miles and hotel points from the next big devaluation? Well, today we have an exclusive first look at MileProtection, a brand new company preparing to launch what is essentially protection against points and miles devaluations and the loss of credit card transfer partners. But this isn't just a product announcement. I wanted to understand how this could actually work, who decides what your points are worth, what could trigger a payout, how they can even afford to pay claims, and what happens if the company fails itself, along with when does this protection actually make sense versus when it doesn't. And because this is the first public introduction, our audience can join the waitlist for free using the code BoldlyGo or clicking the link in the show notes. And there's no credit card or obligation to buy anything at all, but you'll get some additional benefits once they actually go live. So let's get into exactly how MileProtection works. Welcome to the BoldlyGo Podcast. I'm your host, DeAndre Coke. I am super excited for today's conversation, which is going to be a first. But before we introduce this guest, we've got some housekeeping items we always have to talk through and mention. So as a reminder, you can catch all these episodes in their full entirety on our YouTube channel. And don't forget, we do have our vlog style YouTube channel as well, BoldlyGo Travels. We do have our podcast library where you can actually go through our entire catalog. We have that linked in the show notes for every episode. But if you are brand new to this show or a beginner to points and miles, you can literally go to the podcast library, hit beginner, and it's going to show you all the episodes we've ever done that are great for beginners. And don't forget, we do have our timestamps as well, so you can move ahead or back to any of these episodes. As well as for those who only watch on YouTube, don't forget every Friday on our audio-only platform, that's going to be Spotify or Apple Podcasts, we do have our quick hits. That is our news of the week when it comes to points, miles, and travel. So if you want to be able to get that every single week delivered right to wherever you get your audio podcasts, we would love to have you there as well. And wherever you're listening to or watching this, please don't forget to give us a like, subscribe, and we would love a 5-star rating and review as well. So the concept behind today, I am super interested in because we are going to talk about a product that's I don't think has ever before been done, and it's a new concept, and we have the exclusive initial release and launch of said product, or at least upcoming launch, I said, of said product, and the founder of said product as well. So I want to introduce Sebastian to all of you. Sebastian, welcome to the show. You have created MileProtection, which is basically insurance for your points, which is a really interesting and a really revolutionary concept. So welcome to the show.
Correct. Hi, DeAndre. Thank you for having me on.
Absolutely, Sebastian. We're going to unpack a lot of things, and I want to talk about the good and the awesomeness of what MileProtection is, but I want to get a little real with you and talk through the what ifs as well, because this is something so new and so revolutionary as well. So before we get into MileProtection, can you tell us a little bit about yourself? What's your background with points and miles and travel in general?
Sure. So bit about my background. I was born and raised in Uruguay, a small country in Latin America that's not very well connected. Fun fact for the ones that don't know, we actually have more cows than people. So we have about 3 million people and 12 million cows. So the point being here is it's not a very easy place to get a rock. Now, I was lucky enough when I was 15, I moved to the US with my family, and that kind of opened my eyes. And after I finished my MBA at the University of Texas, I ended up in Europe, which is where my grandparents were originally from. And for me, that just changed the way to see the world, right? So I was able to go to the Coliseum or to the Eiffel Tower by taking a train, right? And since then, I've managed to travel to 115 countries by now. And travel was always a passion of mine. I worked in finance for the majority of my life, and I always wanted to do something that kind of combined those two things. And I didn't have the time, or I didn't really find the right angle. And what happened was flying to Uruguay is very expensive, and my parents are still there, so I like to go there whenever I can. And the way I've been able to do that is with points, right? And last year in particular, there was a big devaluation of Avios, which is usually the ones I used to go there from British Airways. And then kind of the idea popped into my head. I was like, okay, so let's say you have travel insurance, right? That protects you in case your flight's delayed, there is a cancellation. You can also get protection in case you lose your bag or that kind of stuff. But if the entire value proposition for you is like, hey, I have a lot of points or I get a lot of value from those points. If tomorrow those points are valued at half what they used to be, you're kind of screwed, right? And that's kind of how the idea came into being.
Now, I find that so interesting because you are right. There's a space for this for sure because as many of us have seen, I know people in our WhatsApp community for BoldlyGo have talked about issues around travel disruptions. I've had them myself. And yes, we can get a lot of things covered and expenses covered. But if you spent 100,000 points on a flight and $5.60 on the taxes, and that flight is canceled or delayed, you can oftentimes for trip insurance get reimbursed for the taxes portion, but not all the time can you get reimbursed for the points that you spent. And we could have worked or often work very hard for those points. So I'm really curious. I mean, you said 115 countries there. You mentioned Uruguay. I know we were talking off air a little bit. My wife and I will be there for the first time ever in January. So super excited to get to experience a little bit of that country as well. So can you tell us a little bit about MileProtection? Can we start from the beginning? So for someone who's hearing about this for the very first time, which if you're listening to the show, this is the release of the information. So you're hearing this for the first time. Well, what exactly is MileProtection?
Okay, so MileProtection does two things. First one is, let's say you have a lot of points in a bank, right? So say Amex or Chase or whomever, you're able to transfer those points to different transfer partners, a lot of those being airlines and hotels. Now, every now and then it happens that you're not allowed to do that anymore, right? So what we're offering is a protection in case that happens. So if, let's say, you always used to transferring points to Emirates and at some point that stopped, then you would have been covered, right? The second angle or kind of on that journey, what you can do after is, let's say you have those American Airlines points, right? Or instead of actually having the Amex points, you just have the cards, or because you travel, you have those advantage miles anyway, right? If, like you were saying, you want to take the New York to London flight, and that used to cost 50,000 miles, and that probably cost 80,000 miles, and in a few years, it will probably cost 120 or 150 or whatever, right? That's something that currently you don't really have a way to protect yourself, right? Kind of the only way to do this is you just, as soon as you get the miles, you burn them, which, okay, I mean, never really thought of a better way, so we're trying to come up with a better way for that.
So if I think through an example here, I know during the Built transfer bonus, I think it was in March, everyone was super excited because they allowed you to transfer 100%, 125% transfer bonus from Built points to Japan Airlines. I took advantage of that as well as many other people did. And so I have now 180,000, 190,000 points sitting at Japan Airlines. But I didn't burn those immediately. I haven't used those. We don't have an upcoming trip to Japan. I'm not even looking at Japan right now. I know I have 3 years from that point before doing it, so it's going to happen. But are you saying that I have the ability to insure against the devaluation of those points? So if their saver fares is 55K and their average fare is 110K or whatever it may be, there's a way to insure against that going up, basically?
Correct. And that's the perfect example, because this is not for the people that are able to book something right now, right? This is for people that, like you, maybe want to go to Japan in the future, have the points there for whatever reason. And if you're planning in 2-3 years down the road, those points are probably going to be worth less. So technically, this is not insurance. I guess we'll get into the nitty-gritty later. But in essence, it's exactly what you said. If today that trip to Japan will cost you 100,000 points, and then tomorrow it will cost you 150, you would get compensated for the 50 extra that will cost in the future.
So if it's not insurance, is there a more precise way? What name would you give it if not insurance?
Right. So in the way it works for the average person, I would say you can think like insurance. Okay. Now, what legally is the terminology is a parametric contract. Okay. It's a bilateral non-transferable contract. So bilateral meaning it's just between you and me, right? Or whoever the user is and the company. Non-transferable means you cannot turn around and sell that to your neighbor, right? So it's for you. Now, the parametric is the more interesting. And this comes from the weather derivatives and the agriculture. So if you think, let's say you're a farmer in Iowa or Texas or whatever, right? Before, if you want to insure your crops against too much rain or too little rain or whatever it may be, you had to have an adjuster. The guy would go there. He would look at your crops, do a survey, right? And he would say, hey, look, you have $1 million in crop, right? Now, you would agree that if it doesn't rain much, the guy would come again, right? He would, again, do an assessment and say, hey, you lost your crops and you didn't. That would take months, right? And it would be very cumbersome, and maybe the guy needed to pay his suppliers at the same point. So a few years ago, what was created is called a parametric contract. And what it does is you're not necessarily insuring your own crops, right? The guy doesn't need to go there and do an assessment, but you agree on, hey, look, I have $1 million in crop, and we agree, instead of you having to come look at the crops, that if it rains less than 2 inches, you will get paid. So similarly here, what we do with the miles is we technically don't look at the miles that you have, but you say, hey, look, I have 100,000 miles. And then we look at an index that we will go into details how that's calculated. And if that drops below the 20% or the 5% or whatever number you want to agree on, then you'll get compensated.
So I was tracking everything, but I want to clarify a point. So you mentioned if you have 100,000 points, you mentioned that you're not going to go in and say, hey, show us proof of these points that you have, but I'm stating I have 100,000 points. And is it if the value of those points drop or if my points go down? Because I believe you talked about you're going off an index. So if the value of the points from the index goes down, that's what triggers it, correct? Just to clarify?
Correct. So one, this does not apply to if you spend your points, right? So if you have 100,000 points and you have 80 because you use 20, then that's a separate story, right? Like you said, it's the value of those points go down.
Got it. Okay. Now I'm curious. Well, yeah, let's get into that a little bit more, because when it comes to the devaluation process, how do we actually calculate that, right? Because I'm thinking so many different variables in my head. As an example, for instance, is it route based? Is it system wide? Because I could be looking for JFK to Tokyo as an example, right? And I know the absolute cheapest, if I want to get on at 11 a.m. East Coast time, 360 days in advance, that I can try to get one of these saver rates for 55,000 Japan Airlines miles. Or like I can just be chill like I am myself and book for 85,000 to 110,000 Japan Airlines miles per person, right? So that's how that is for that flight. But that flight itself, maybe it goes to 120 or 130 or 150, or the saver rate goes to 75 or 80, but it doesn't affect all of Japan Airlines. So how do we how do we plan around a value of maybe a route versus saying, okay, all of Japan Airlines points are worth less?
Yeah. So as you probably are very well aware, there are already a couple of companies that do this kind of valuation. The problem with that is they don't do it on a statistical level. It's kind of, hey, we do it this week, we do it next month, and so on. And unfortunately, I cannot work with that. So I don't really want to reinvent the wheel, right? If any of those companies, I'm actually talking to some of them, are willing to do it more methodically, then I'm happy to partner with them. But you can think of this in the same way that they do it, right? So they're not necessarily looking at the exact route that you're planning on taking or in the exact time period, but they're saying, hey, look, if we look at, let's just be very broad, at all the routes from Japan Airlines, all the destinations, and compare that with cash prices and so on, we think the mile is worth, 1.5 or whatever, right? So we do the same way. This will be confirmed in the future, right? And this will be public. We're still trying to work this out, so any feedback is welcome. What we have in mind is per program, it will be about 20 routes back and forth, right? Because depending on the destination and where you're actually departing from, the price changes. We'll look at fixed dates throughout the year, so they include high and low seasons. And it will be mainly in business class. I think that's where the majority of the value is, right? First class, it's very niche, and then economy would give you a completely different value. Now, that said, if you don't agree with our value, you can choose your own. And what I mean by that is, let's just take a very simple scenario. We believe the mile from Japan Airlines is worth 1 cent. But like you said, hey, no, I think it's 1.4 because, I don't know, I use it for first class. Fine by us, right? Again, going back to the crop scenario, what we need to agree is on the total amount that you want to be protected against. And it's not so much a conversation of, hey, DeAndre thinks this is worth 1.3 versus 1.2 and so on.
How easy is it for someone to actually do that? Is it a phone call? Is it customer support? Or they just go online and adjust a little slider? Like, how does it actually work?
Good point. So yes, exactly the third option. So if you go to mileprotection.com, there's a place where it says estimate my cost. And then it's exactly that. So it's a very simple process. First, you choose your program. So say United, American, and so on. Then it will show you the price that we believe the value, the mile cost. You can adjust the value. And then you get into the different deductibles that you can select, and we can go into that. And then what that will tell you how much your cost per year will be and what your maximum payout will be. That's live. Like you mentioned, the product is not yet live. We're aiming to release it towards the end of the year, but there's a wait list and you can play around with the product in case you're interested and be informed of the future developments.
I know there's some benefits that are going to be released to our community and anyone that signs up through the waitlist through the link that we'll provide, which we'll get to at the end, but just want to leave that as a placeholder for those listening. So Sebastian, a question here for you. I'm not saying that this is one of the entities that you're getting your data from, to be very clear to listeners. I'm just using this as an example, but Frequent Miler has their RRV, their reasonable redemption values for pretty much every points system out there. And I know as an example, because I'm just thinking through something very recent, this year they said Hilton points have gone from whatever they were, I think maybe 0.44 or something like that, of value of cents per point to like 0.35 cents per point. So let's just say hypothetically, that is the platform that you're using or data like that. We could insure and say, hey, if I had 1 million points and it's valued at 0.44 cents per point, and now data is showing it's worth 0.35 cents per point, I can insure essentially that reduction in value for my Hilton points. Is that a way to understand it?
That's exactly the way it works.
Awesome. So can you walk us through the full process?
Sure.
Using like a real example. So I know we've had examples here, but like actually enrolling a balance through receiving a payout. You just mentioned there's a little slider. You can pick what the value is. You can pick which miles you want to protect and the balance. What comes after that?
Okay. So let's do a couple different scenarios so it's quite clear how it works. So let's say you choose the zero deductible, right? And this is like your car insurance, right? So basically the higher the deductible, the cheaper the premium. Let's say just very easy numbers, right? You have 100,000 miles. Those miles are valued at 1 cent. Forget the program, right? Just journal the concept. So that means this is worth $1,000 if I'm not doing the math incorrectly. And let's say tomorrow, whatever platform you were referring to, right, or whatever index we agree on, says that's valued at 0.8 cents, right? So that's a 20% devaluation. So what will happen is after 2 weeks, you'll be paid the $200, right, that they lost. If the next question is why the 2 weeks? Basically, we monitor this on a weekly basis. And because we need to take into account that, hey, there can be a glitch, an error fare or whatever, you need to repeat the instances of a devaluation. Now, maybe a more complicated scenario. So let's say you choose the 30% deductible. On that same scenario, with the 20% devaluation, you would not be paid, right? Now, this is a contract for a year. So this does not mean that the devaluation needs to happen all at once. That means that if at any point throughout that year, there was a 10, 20, 30% devaluation, then that will trigger the compensation, right? So it means that it's cumulative. So if it can be 20% today, or it can be 1% today, 1% tomorrow, 1% the day after, and so on until you reach the trigger. And we can also go into more complex scenarios, like what happens if it goes down and it goes up again and it goes down. But just to give you the gist of it, that's how it works.
So I do want to get to the more complex scenarios, but before we do that, just to make sure I'm understanding properly, so let's say it goes down to 20%. So in this example, just to keep the numbers simple, my points were worth $1,000. They're now worth $800. I've got the plan where there's no deductible, basically, so I'm getting paid $200 in cash because of this $200 loss in my value of my points. And then hypothetically, a month later, it goes down by another $300 in value. That would trigger me to get another check for $300 as long as I was in that same first year or of the year of the contract, correct?
Exactly. So just because you got a first payment doesn't mean that you will not get a second one. Obviously, this is capped at the total amount that you purchase. So like the $1,000 is the maximum that you can potentially get.
So going to the more complex scenario, what if the value happens to go back up for whatever reason? Then do I owe money back, or like how does that work?
No. So let's first the easier one, right? So let's say it went down to 80, you got paid, goes up to 90. Great for you. You got the payout and then you got 10 after, right, that you can use. Now, let's say after the 90, it goes back to 80. There, you're not going to get paid again, right? Because that's called the watermark. And basically, that's where you were before. Now, if it keeps going down and you're at 70 now, you will still get those 10% delta, basically.
Now, are you guys monitoring these valuations, or does a member have to self-report the change in metrics? And then if you say a mile is worth X amount, but the member has said it's worth a much higher amount, then how does that work if it devalues on your index, but that's not the same number that the member used?
Good question. So on the first one, no, the member does not need to be looking at valuations every single day. So we will have a dashboard. Basically, it will be like having your portfolio of stocks, right? If you have one. So it will say, let's say you have 3 programs, right? It will say United, American, Delta, right? It will say, hey, you have notionals for $1,000, $2,000, whatever, right? And then the current valuation is X, Y, or Z. Now, when it comes to the reporting the devaluation, like we said, because it's a parametric contract, there's no claim process. That's the way it works, and one of the benefits. Now, on the disagreement, so if we agree on the value of the mile when the contract started, right, then the devaluation will be the same because it's a percentage, right? So if you say it started at 1 and then it went down 20%, then we should agree. Now, if for whatever reason you do not agree, you can reach out to us, right? Now, the methodology will be public, right? We don't have it yet because the product is not live. Obviously, we would not expect anyone to sign up for this before this is live. So you can just sign up for the waitlist, be updated, right? Contribute even if you have ideas to make this better. And then once this is live, you can see the methodology and you could track this. If you don't believe us, right, you could go through the routes and do the calculation on your own as well.
So Sebastian, is someone insuring their entire balance, or do they choose how much they want to cover? So is it just like, hey, I'm protecting all of United Airlines, or I'm protecting my 100,000 miles at United Airlines?
They don't have to, so they can choose. If they want to protect their entire amount, they can. If they are like, hey, look, I have American Airlines and I have United, I don't care about the American ones, I want to only have United, they can also do that.
Now, I mean, obviously, I know you said it's not insurance, right? It's a prometric contract, I think was the explanation you used. So understandably, the concept of it is that it's like insurance. So from an insurance standpoint, right, you're putting money in, you're betting on a scenario. If that scenario happens, you get paid. If it doesn't happen, the insurance company has made their money, which is what allows them to pay that money out for other people whose scenarios do happen. So I say that to say, what if someone goes ahead and they say, hey, I want to protect, or I'll use my example, I want to protect my 180 or 90,000 Japan Airlines miles. I pay whatever the cost is for that. And then a month from now, I book a flight with all those Japan Airlines miles. I'm assuming that money is a wash then because I no longer have Japan Airlines miles to protect?
No. So basically, we're agreeing a contract, and for the entirety of that year, we're responsible in the case that devalues. So it doesn't matter if you use them or whatever, right? Now, I just want to make a quick comment. It's definitely not betting against, hopefully, because then it turns into a speculative product and then again to finance regulation. But yeah, in essence, that's how it works.
Got it. So just to clarify, so it's a 12-month contract. If I go ahead and insure my Japan Airlines miles for the 12 months, and 6 months into that contract, I use up all of my Japan Airlines miles, I no longer have anything to insure, then the contract, I can end it and I only paid half the cost, or no?
No. So it's for an entire year, right? So there's a 30-day period where you can cancel this, like in a lot of different products. But once that starts and there's an upfront payment, I believe it's like any other contract, you would not be able to cancel that just because you used the miles. It goes back to the example with the farmer, right? So it doesn't really matter if you own those miles at that particular point. And if we want to get technical, that's called indemnity principle in insurance. And that's why this does not have, and therefore it's not insurance.
Got it. That's right. As you said that, I was just thinking out loud. You don't actually verify the balance of our miles.
Correct.
So you don't know exactly how many miles I have used or haven't used or anything like that. So if I just say I want to protect this, and then 2 months later, I actually end up using all of these, and then Japan Airlines gets a massive devaluation, I'm still getting paid, and I got to use my miles without them devaluing.
There you go.
Yeah. Like in my head, I'm like, okay, that's kind of attractive. And okay. So I assume then, Sebastian, so like a lot of insurance policies, right, you can increase, sometimes you can't really decrease. So if once the contract starts, so outside of that 30-day window you just said, I assume then, so you're kind of locked in. So you can't really decrease coverage because, again, it doesn't really matter if you use your points or not. But could you then increase more? So I have 190,000 Japan Airlines miles, and then I end up transferring another 100,000 over there. And I say, hey, I don't want actually to be covered for 300,000 instead of 200,000. Is there going to be some flexibility at least to add more? Or is it just like coverage for a new amount over a longer period of time?
Correct. So you would be able to add a new contract basically where you would say, hey, look, I have another 100,000 miles. The way you can preempt this a bit is there are a couple of things you can do, right? So let's say that, I'll just make it up, you get every month 10,000, right? And you're not going to use those 10,000 miles every month, right? Then you can just do a contract for that year for what you expect to have and you want to protect, right? Because again, we're not necessarily checking what you have on your account, right? So it gives you that flexibility. In the same way, the other way around, right? So like if you get 100,000 miles and you're only going to use 50 and you want to only protect the other 50, you can also do that.
Now, can members protect multiple airlines and hotel programs at the same time? Do they have to just pick one? Do they just pick just one bank like a Chase or an Amex? Like, what's their options there?
So those are all different combinations because from our point of view, it's different risks, but they can definitely protect all of them, right? So they can protect as many as they want. There is a cap per contract of 50,000 nominal, right? So that would be like 4 million miles or whatever. We're happy to work with people with more, let's say, complex or tailor-made products. That's just from a risk perspective, a number that we're using to somehow limit our exposure.
Okay, so I'm understanding a lot of the nuances, but I'm going to go a little bit more generalized because I think it makes sense. Okay, if I have Japan Airlines miles I want to insure or American Airlines miles or whatever it may be, I'm capturing that completely. I think you mentioned before if you wanted to insure, I guess, Emirates, let's just say Chase to Emirates, or your ability to move Chase points to Emirates, and that got just straight canceled last year, right? Like that makes sense. So I'd assume then someone could say, hey, I want to protect Chase to Hyatt as an example. Would probably be a big one for a lot of people. But I'm curious as to what if I don't know where I want to use my points. I'm stacking Chase points, I'm stacking Amex points. I've got hundreds of thousands of Chase points, hundreds of thousands of Amex points, Citi, Capital One. I don't necessarily have a specific airline or hotel in mind I want to insure. Can I just insure my, I don't know, let's just say I have 500,000 Chase points. Can I just say insure 500,000 Chase points very broadly? Is that possible? And if so, how would that work?
Yeah. At the moment, no. That's a conversation I've had with quite a bit of people, and the issue is exactly that. So if you want to protect the transfer partners and you do not know where that's going, that's a bit harder to do. And the reason for that is because if you take those Chase to Hyatt points, right, we can agree on basically the value that you give to those points. Now, if you use them today for one program, tomorrow for another one, that's a bit harder to do. And that's why we came with this solution where, hey, look, you can choose a bank and a transfer partner and we can protect that. If we think in the future there's a lot of demand for that, we'll be happy to evaluate that.
Got it. Okay, so I can't just in full say, hey, insure all of my Chase points. I could, if I wanted to, say insure my Chase to Hyatt and my Chase to IHG and my Chase to, I don't know, KLM
Whatever.
Flying Blue. And I could like go through the 20 transfer partners and insure all of that, which is likely very expensive, I would assume. But if I wanted to cover everything, I could, but can't just broadly cover a bank by itself.
Yeah. And that's why we're having these conversations, because it also makes me think of new scenarios that I have not previously thought, right? And my thesis was, hey, look, probably most people use 2 or 3 transfer partners, and that's a very feasible scenario. Now, if for whatever reason you actually use 10, and there are a lot of people doing that, hey, happy to work on that and try to come up with a solution.
I think that's a great point as well, because I know part of your goal in us having this conversation, outside of putting it out there, outside of getting people that to know of this and be on the wait list, is you wanted ideas for what more you can do and what more can be done, and how are people actually using their points so your program can be designed to actually fit with what our community and others in the award travel and points and miles space are looking to do. That's a fair assessment?
Perfect assessment. Like I said at the beginning, I started this because I personally experienced the whole devaluations, right? And I like to travel. For me, this whole traveling thing started because of my family, and I know it means a lot, and there are a lot of emotions. And for the previous decade, or like since this started, basically, there's not really a way to protect yourself against these devaluations. So I'm just trying to come up with a product that works for the majority of people. So happy to hear about different solutions, or if they think, hey, look, have you thought this or that? Please reach out to me, and I'll happy to have a conversation.
Hey everyone, quick break from the episode. If you're enjoying the show, make sure you're subscribed on whatever platform you're listening on so you never miss an episode. And if you've gotten any value so far, it would mean the world if you left a quick rating or review. It helps more people discover the show and keeps us motivated to keep creating great content. Also, if you're feeling stuck or want help with points and miles, whether it's picking your first card, planning a big redemption, or even having someone book it all for you, we've got you covered. There's a link in the show notes to schedule a free points and miles consultation. Just fill out a quick questionnaire, tell us your goals, and we'll take it from there. And don't forget, our newsletter and private Facebook group are great ways to stay on top of breaking news, updated card offers, and tips that don't always make it into the podcast. You'll find those links in the show notes as well. Now, back to the episode. So we're going to get into we still have a lot more to get into. And I know listeners are going to have questions on well, how can we afford to do this and kind of the financial model of that. So we are going to get into that. Before we get into that, I do want to talk about the valuation index that you mentioned. And part of that is, can you talk through so how do you account for dynamic pricing, peak seasons, right? As I mentioned, saver availability versus partner awards versus standard, how frequently will this index be updated? Can you talk through that aspect? I know it's not live yet. Obviously, you're still working through some of those aspects, but can you talk through that and talk through how are you in figuring out the research behind creating this?
Sure. So there's a bit of this that's proprietary that we'll get more into later with the models and back. Now, how is this basically thought? Is we take the data for the past 15 years or so for all the programs that we're covering. We see how often devaluations happen, what's been the average, what's leading those devaluations, right? Meaning fuel, COVID, whatever, right? Financial results. And then we can kind of calculate our own models, right? And price that accordingly. When it comes to the evaluation of the actual miles, the way that we account for dynamic pricing, and again, this is going back to the index, so it's not necessarily the valuation that you allocate, right? So if you only travel from New York to London and that's the only route that you look at, and you only travel on Wednesdays in July, then that may be a very specific scenario, right? We're looking here at the basket of goods, right? So you can think of as the CPI, the Consumer Price Index, right? That measures the cost of food to live. That doesn't really mean that it's the cost that you pay the bread when you go to the supermarket, right? So going back to how this works, we look at different seasons, right? So we look at, say, March, July, September, and December, and that accounts for both high and low seasonality. But yeah, that's the overall concept of how this works. And we look at the most frequent travel routes. And the reason why we pick 20 routes at the moment is because after that, you go into diminishing returns, where basically doubling the number of routes doesn't give you more data. Whereas if you cut that in half, then yes, there are quite a lot more variations in the data.
Now, are you saying, when you mentioned those kind of quarterly points, as you kind of mentioned, is that also how frequently the index is updated, or is that updated monthly, or how often are you updating this data point?
Yeah, so the index, the idea of the index, it's to update either weekly or bi-weekly.
Now, I've got a question, because at the end of the day, I always want to think through my community, my listeners, and keeping them protected and safe as well. And is the methodology going to be independently reviewed or audited? Because what my concern is what's to stop MileProtection from changing the methodology that basically in a way that ends up reducing or avoiding payout. Like you say, hey, points are here, and then, this program devalues, and you kind of say, well, let's tweak our calculation here. So so instead of it being a 20% devaluation, we calculate as only a 10% devaluation, right? So I know you said you're going to have things public and people can see, but I'm curious what's protecting us on our end.
Fair question. So to be completely transparent, the methodology will probably change, right? And what I mean by that is programs, change. So if you look at the cost of miles 10 years ago to today, that's different, right? So hopefully we're around in 10 years, that will change. Now, obviously, what we cannot do, and we will not do, and that's by contract as well, is if we agreed on a contract with you, DeAndre, that valuation will not change, right? For next year, that may have changed, and then you can decide if you like it or not, right? But obviously, this is not retroactive.
Got it. So contractually, you are required to, points are valued at a certain way, and those points adjust. It's a contract, like you said, bilateral. So each party has agreed. I've agreed to pay. You've agreed to cover based off of a certain requirements being met. So that's locked in. Okay, that makes sense. Now, how would you handle programs? There's been a lot of programs out there that have done like silent devaluations where they haven't said anything. It just kind of has happened in the background versus big major announcements, like Hyatt has done or whatever it may be. Is that all tracked and balanced out, or are you guys just kind of watching the news and looking at this index based off of what other creators or whoever is researching?
Good question. So they usually call them enhancements, right? But no, so it's not necessarily that this depends on a company making an announcement. This is being checked in the back, right, by us through actual redemptions, right? So we will go look at the flight and actually there's a program for that, right? But we will go look at the hotel and see what the actual cost is. So it doesn't really matter if they say that there's a devaluation or not. And it does not matter if the award chart is dynamic or not. It's what the actual redemptions cost.
Now let's get into the kind of deductibles and your pricing strategy a little bit here. Can you talk through the basic, I know through your website that I've seen, you have the basic, standard, and maximum protection levels. Can you talk through what that is? Is that just a deductible or is there more to it?
Sure. So that was to give more optionality to members, right? So let's start with the maximum, right? So zero deductible. That means as of zero devaluation, or one devaluation, you get paid. Right. Then if we go to the complete opposite side to that is the basic, or we call it catastrophic devaluation, right? Think of that as you get paid when Spirit went bankrupt, right? So that's the most feasible scenario. Now, I also come from finance and have a background like you, and we used to have this silly analogy when we talk to clients. And let's say you have a very fast car, right? So BMW or Ferrari, whatever, right? Let's say potentially you can go 100 miles per hour or 150 miles per hour, but just because you can doesn't mean that you're comfortable with that, right? So you may be only comfortable going at 10 miles an hour or 50, right? So in the same way here, you can choose what you're comfortable, right? And what that's worth to you. So it's very case by case specific and it matters for the person. So we covered the basic, we covered the max. Now the one in the middle, that's the one that basically sometimes you're going to get paid and sometimes you're not going to get paid.
Now, I know you expressed the annual cost as a percentage of the protected value. How do you determine the pricing then?
Good question. So that is not yet fixed. Those are estimates. So you can take that as a reference. I know that we're not going to double that price, right? But it will be dynamic. And what I mean by that is we're not just looking at the chances of a devaluation happening. And what I mean by that is if Hyatt devalued yesterday, right, they're probably not going to devalue again tomorrow. Whereas if they've not devalued in 5 years, they're probably going to devalue at some point in the next 12 months, right? So that will affect pricing, and the price of Hyatt in that case will not be the same as another partner, right? The other thing that we look at is the average devaluations for each program. So there are programs that devalue on average, say 8% a year. There are programs that devalue on average 40% a year, right? So that changes the pricing, and that's the logic behind that.
So going back to the deductible, if I pick, let's just say a 20% deductible, going back to our original example, my points are worth $1,000. I pick a 20% deductible, so my points are now worth $800. Am I paid out when it triggers at $800, or does it have to be worth $799 for it to pay out?
Good question. So it's $799. So the deductible is basically the risk that you're taking in a way, right? So If it goes to 100, you don't get paid. Once it goes to 799, it may. Now, what the idea that we have here is that we have a bit of leeway. This is not contractually agreed, but this is to avoid disputes of, hey, I thought it was 80, I thought it was 79, right? And we are going to have a bit of leeway there. But contractually, yes, it's like you mentioned, it needs to go to 799 to get paid.
And if it was at $7.99 in this example, my payout is $1, correct? It's not $201.
Correct. It's $1, not 201.
So I'm curious, Sebastian, what's the rules around disputes, right? So we've had this agreement. I think my points have devalued by more. Your system has calculated that they haven't, or whatever it may be. Without getting into like legalese and going like, hey, we got to go to court for all this, right? I'm just on a high level. How do we handle a disagreement that someone thinks that they should be entitled to compensation, basically?
So that would be handled directly by us. The idea is to get this audit in the future, so then maybe you can go through the auditor. Now, the whole point of this is that we should not get into this type of disagreements, right? So when you close a contract, we are agreeing on 100,000 miles, and we are agreeing that those miles are worth 1.5 cents or 1 cent or whatever, right? Now, if you do not agree that to start with, then we should not go into a contract yet, or we can agree on different amounts. Now, when it goes to the devaluation, right, this will be live and you're going to be able to see, hey, this is calculated this way and that way. And we're agreeing on respecting that, both parties, right? So there shouldn't be any argument there. Now, of course, it may come to that at some point, and that's why still we can have a process for disputes. But in essence, because you don't have to come up with that claim to us, we're going to notify you and you can track this live on a dashboard. Ideally, we shouldn't be getting into this disputes.
So, Sebastian, I got a kind of interesting scenario then for you, because we talked about we can protect individual transfer partners, and I'm going to go back to the Chase to Hyatt example. So, Chase to Hyatt protection, I've signed up for this. Now, I've signed up for this. I have a Chase Sapphire Reserve. We'll use the example of my wife. She signed up for it as well. She has a Chase Sapphire Preferred. Now, for me, Chase has not devalued. I will be able to transfer 1-to-1. My points to Hyatt have not changed at all. But for my wife, there's now a 4-to-3 ratio starting in October. So for her, that is a devaluation, but for me, it's not. So I know this is probably a very unique, I don't know if this has ever happened before elsewhere type of scenario, but how do we deal with something like that?
That's a good question. So the main conversation that we've been having today is the devaluation with the points once you transfer them, right? So that's separate. When it comes to transfer partner, the product that we were talking about until now is just if that stops being a transfer partner, not if there is a devaluation, right? So that would not be covered.
Gotcha.
Now, there will be an add-on where you can say, if my transfer partner, say Chase to Hyatt in this case, devalued, then that will be covered. But at the moment, it's per bank, so it's not per credit card. Exactly what you're saying, this is a new scenario. We haven't been able to run through numbers yet fully. I'm sure by the end of the year, I'll have a better answer to that.
Well, then what are the biggest exclusions that we need to know before we're signing up then? That's a great one. Outside of that, what are the other exclusions that is going to be very important for someone to know so they're not signing up for something and not getting their expectations met?
Right. So first one, which is more of a legal thing, if your account was closed due to fraud, right? That's not covered. Okay, this is in case your points are devalued. Same if your points expired, which I think nowadays is less common. Okay, but that's not, we're protecting the value of those points. Now, the one that's a bit more tricky and maybe less intuitive, if an airline switches alliances. Okay, so for example, we have SAS moving from Star Alliance to SkyTeam last year, 2 years ago, whenever that was. That's not covered in and out of itself. Okay, so that will be covered if those points, once they get transferred, it's determined that instead of 1 cent a mile, they're valued at 0.5, then definitely that will come into play. Okay, the other one is if the airline is bankrupt, that will be covered, but that may delay payments. And what I mean by that is if you take the example of Spirit, in the past, I think 2 years, they had like 3 reorganization processes, right? We need to wait for the company to actually stop operations, right? And you not being able to use those partners. Until that happens, that will not be covered.
Got it. Okay, so all of those things make perfect sense. And I love that you pointed out and gave some examples of that because I think clarity is key. I assume, similar to other types of insurance, I know it's not insurance, be very clear, but other types of insurance. So if I was thinking about signing up, I'm like, I need to sign up. I want to protect my points anywhere, my Japan Airlines points for simplicity. And I haven't done it yet. And today they announced Japan Airlines miles are worth less, whatever it is less, right? And then I sign up tomorrow. I'm assuming I don't get the benefit of the protection because I didn't sign up in time before it was announced, correct?
That's a good point. Yeah, correct. So obviously, whatever happened before you sign up, it's not covered. There's also the 30-day cooling period. And what that means is because you as a consumer are able to cancel the contract within 30 days, whatever happened in those 30 days, that's also excluded.
So then with that 30-day exclusion period, just to clarify, does the 12 months start after that 30 days or it's actually 11 months covered? That first 30 days doesn't count.
Oh, that's a good point. I have not actually accounted for that. So at the moment, those 30 days are in the 12 months. Now, if you sign up for the waitlist with a referral code, and I guess we'll talk about that later, you will get 2 extra months. But look, happy to rethink about this and make it a 13-month contract instead of a 12-month contract if that helps people.
Okay, no, I mean, I know it's part of why we're doing this, right? Because you want to get this vetted as well. Not vetted, but you want to get, some punch holes through things, right? So it can be a better product. And I love having the opportunity to do that, not just myself, but also the community behind me as well. What if 2 loyalty programs merge? What do you do then?
Good question. So we have a good sample of that, which is ADA Airways and Lufthansa. So again, same case as the bankruptcy before. So if the loyalty program goes bankrupt, because a lot of times they're separate legal entities and, they do different things, then that's covered. If those points get transferred, then it's not a bankruptcy. We will reassess the value of those points. If those values decrease, then that's covered. If they increase for whatever reason, then that will not be covered. I mean, that's covered, but you wouldn't get a payout.
No, I'm trying to think through all the crazy things to throw at you here, Sebastian. So what in the scenario, Hyatt has a set award chart. So what if they introduce dynamic pricing, but they don't actually formally change their award chart? So on paper, their pricing is the same based off of the award chart, but in reality, they have this dynamic aspect now, which is kind of like a devaluation. Is it now going back to the research and analytics of the indexes, basically, to see if it's truly a devaluation?
Yeah, so it's always based on the index and the real potential bookings, right? It's not what they have on an award chart, so it does not matter if they have one or not. On the actual case that they do that, it will depend on the actual kind of what you can get for those points and not for what they say those points are worth.
So then I'm going to go straight to the point here, Sebastian. How can you guys afford to do this, right? Let's say all of us, we hit the wait list, we all day one sign up for Chase to Hyatt protection, and then Chase just decides day 2, we are cutting Hyatt completely. And there's tens of thousands or $100,000 worth of claims because some of us have $1 million Chase or whatever it may be. How can you actually afford to do this?
That's a good question. And that's part of why we're doing the waitlist, right? So we want to see how many people approximately have Hyatt points, how many want to do, Japan Airlines, like you said, and so on. This obviously would not work if we only have people doing Hyatt, right? So this is part of our risk analysis in the back, but we have caps per program. You as a user should not worry about that because that means if you're able to protect those points, if you have a contract for those points, you're going to be protected. But obviously, if let's say we have 1 million people with Hyatt points, and that's the only thing that we have, the 1,000,001 will not be able to protect, right? So that will not be possible.
So that 1,000,000 first person couldn't even sign up basically if you had that. Okay.
Correct. So they will not be able to sign up.
So you have all that in place. Do you have any actual insurance covering the consumer as well?
Good question. Yes. So technically, the way this works is we're having a bilateral contract, right? That's going into a special purpose vehicle, and then that's being reinsured back. So there is a backing. It's not, let's say, if MileProtection is not around, there's someone that's responsible for that.
Got it. So there's reinsurance basically. So again, I know you're not insurance, but this is actually works really well in my world, the line of work, especially on the life insurance standpoint. A lot of people don't know
Yeah, no, that one's actually reinsurance.
Yeah. So like in the life insurance space, you can actually have someone that's covered by your company or a company, but it's actually because of their health, perhaps, they have an insurance company that's backing them to pay out that contract from a risk standpoint. So if I'm understanding you correctly, you have your contract, like that's money's in reserves, but you have backup insurance that's helping to make sure that you can fulfill your contractual obligation, essentially.
Exactly. So on reserves, we have a multiple of our expected losses, and we are covered about our worst possible loss, right? So if you think in finance terms, basically the way that companies work is usually, they know that they think, hey, they're probably going to lose X percentage this year, but the reserves that they need to have are to cover the worst possible scenario that they've seen throughout history. So in financial history, that tends to be the crisis in 08 and 09, right? And that's basically what we protect ourselves against.
I got to ask you this, Sebastian. What happens to the customers? What happens to the rest of us if you do fail? I know you just said there's reinsurance there, but let's just be real. What does that look like? We have contracts, so maybe what happens if you guys don't make it? I mean, we're a startup, we're a launch, there's risk. I want to make sure I'm protected. I want to make sure my listeners are protected. What's the situation there?
So the part of the fees that are for protection, because there's obviously part that go into the operational cost of running the company, those are ring fence. And what that means for people that are not in the industry, basically they're separated and segregated from the operational account. So that means I cannot take it and go buy, a bagel with it. And that's completely separate in case the company goes bankrupt. And that's where the money would come from. Now, again, because the contracts that you have are backed by someone else, it's not necessarily just the risk of my protection, but you have someone reinsuring you in the back. Once we are live, we're going to share the names of those companies. We're working with Type A rated companies. The reason why we cannot make it public is because we haven't formalized the agreement, and that will depend on part on the people that sign on the waitlist. And then we know, hey, look, we have 100 people, 1,000 or 1,000,000.
So speaking of the wait list, you alluded to this at the beginning, but can you confirm again when you're wanting to or hoping to or going to launch?
Sure. So the idea is to launch by the end of this year or Q1 next year.
So between now and the launch, what should waitlist members expect? And I'm going to go more specific, because you already touched on a little bit of this, but what should the waitlist members from BoldlyGo specifically expect?
So first of all, if you sign for the waitlist, we'll guarantee the price at sign up, right? So what you have now is an indicative price, right? Once we're live, we'll give you the price and then you can agree or not agree to that, right? And then if you agree to that price, that cost will be maintained for the next 3 years. Okay, so that's for anyone that's on the waitlist. Specifically for the ones from BoldlyGo, you will get 2 extra months on top of your first year.
Absolutely love that. So basically, there's a rate lock, and you're guaranteeing once you have all the numbers in place, that rate is guaranteed for 3 years. Anyone on the wait list, if they do want to sign up and insure. Now, is that if they sign up immediately, or they could be on the wait list but not sign up for, let's say, 6 months from now because they finally have something they want to insure 6 months from now? Is that still guaranteed for the 3 years, or only if they sign up immediately when you go live?
Fair point. No, obviously they don't need to sign up immediately. I haven't put much thought into that. It will probably be 3 or 6 months. Now, just to be clear on the pricing, so what you lock is the rate, exactly like you said. Obviously, if you want to insure higher balances or lower balances, the overall cost may change.
So let's talk through, Sebastian, here's where we start to wrap up, the case for not getting this, right? Because obviously there's insurance for a reason. This isn't insurance, but it mentally for most people is insurance. There's a reason. Some people don't want to bother with paying extra for trip insurance because why have the extra costs? There's pros and cons for doing that. So I'm going to ask you this. What's the strongest argument that our community, because our community are pretty sophisticated points users. The majority are not day one individuals. There are plenty, and we love them as well. But most of our people in our community are pretty advanced. They're putting credit cards on payroll, and they have businesses, and they're taking their family to all over the world in 5 business class seats and Q suites and all sorts of crazy things. So what's the strongest argument why someone would not need this?
Okay, so for the overall audience, obviously, if you have 20 miles, don't bother with this, right? Like, it doesn't make any sense. I would say for us, basically, the client that we're thinking is anyone that has 100,000 miles and above, and probably above 300,000. Now, for your audience more specifically, if you burn or like you're able to use all the points immediately as soon as you earn them, this is not for you. It does not make any sense, right? This is for someone, like you're saying, they run payroll on the credit card, they have a lot of points, and they're planning to use it in the foreseeable future, right? Because you can also be that you have millions and millions of points and you're just not going to use them, right? Don't waste the money. It does not make sense. This is for someone that, hey, look, we're planning our honeymoon in 2 years. We want to go to the overwater bungalow in the Maldives and we want to fly the Q suites there, and we need to save for 2 years. And if this gets cut in 50%, we're screwed. Okay, so that's one case. The other one, like you said, this medium business owner that run a lot through the credit card. They have a lot of points, but they do use them to book 5 business class seats, and they cannot book them right now either because they don't have the points yet, or because they're only planning a trip in 2 years from now or whatever. That's the target audience.
Got it. So where I'm seeing this, I think my example, as you said at the beginning, was perfect, right? I transfer points to Japan Airlines, take advantage of a transfer bonus just because, and it worked out. Well, I have points sitting there that I have no plans to use anytime soon. So the value of those points go down the drain. I can insure against that risk, basically, or contract against that risk, basically. So that makes sense. Or I could see another use case is a scenario that's happened to me a couple times where perhaps I transfer points to Aeroplan that I plan to use immediately, and maybe I do use immediately, but because of travel issues or I find a better booking or whatever it may be, I pay the cancellation fee, I get those points back, but now I have these points just sitting in Aeroplan as well. And that actually happened. I had 230,000 points sitting in Aeroplan for almost a year, and so I could kind of protect. I'm like, hey, these were sitting with my credit card, they were with Amex, but now they're in Aeroplan, and I don't want them to lose value, so there's a way I can protect against that, basically.
Perfect scenario. Yes. And actually, I had not thought about that, right? I thought that would be a bit more complicated, but that's perfect case. What you can do with that is you can try to dip your feet in the water, right? Get the one with the high deductible that's very cheap. And hey, look, if tomorrow Air Canada goes bankrupt, right? And then you cannot do anything with those points, at least you get somehow compensated, which until today, there's no way of doing that.
So as we start to wrap this one up, Sebastian, what needs to happen over the next few years for you to consider this endeavor successful? What are you ultimately looking for?
Good question. So I think I want to take it a year at a time, right? And make sure this grows and it's really useful for the community, right? It can be that for whatever reason we start and we just don't see the value, or people don't see the value, right? Ideally, I want to be the quote unquote way to protect your points in the community. And I see traveling as something that kind of unites the world, and I benefit from that quite a bit. And I want to give back to the community, and hopefully that's the way that the company can grow in the next few years.
Is there one thing that you want a skeptical points and miles enthusiast to understand before deciding whether to enroll or not? If there's one thing, I know you've covered a lot. We talked about possibility of failure. You talked about if you have billions of points, basically, this isn't for you, right? You have 20 points, it's not for you. But is there one thing that you want someone that's just skeptical? If people listening, they're like, this doesn't really feel like it's for me. One thing that you want them to understand? Yeah,
I think for the miles enthusiast, I've talked to quite a few people and very smart ones, and they're like, okay, how can I game the system the same way that I do the miles and points? Look, it's probably not going to work out, right? If you actually try to, or it may work for you, but overall for the community will not work. So should not be a speculative product, but this should be a product where you're like, look, I have these points, they're valuable to me, I cannot use them right now, I want to protect them. That's what you should take from this conversation.
All right, Sebastian, one last thing is I did ask our audience for questions. I didn't give them too many details. I was very vague with them. But in our BoldlyGo WhatsApp community, which is the best place if someone wants the ability to ask questions to our future guests, well, that's where you got to be. I basically said, hey, there's this interesting concept of insuring points coming out. What questions would you have? And we had great questions from our listeners. Now, most of those have already been asked. And so, for instance, Josh, he mentioned, will the insurance cost the same across point ecosystems, or will it be scaled according to ratios? Also, will the insurance be dynamic?
So yeah, the answer is it will be dynamic. So for the programs that tend to value the most, that will be priced higher than the ones that tend to value less. And obviously it's a percentage, right? So hypothetically, if you value one program a lot more than another one, that one will cost the most.
Diane said, what is the time frame available? I'm guessing the longer out, the higher the price. I assume that's just 1 year. That's just the fixed only option, correct?
That's 1 year. For the transfer partner protections, you could do 2 years.
I know Karen asked who's insuring you so you don't go broke. I know we already covered that, so thanks for that question, Karen. And then lastly, interesting question from Tina. She said, if you use miles for a flight, the miles then get devalued, and you had to cancel or change your flight after the devaluation, how does the insurance kick in?
Wait, let me think about that for a sec. So that should not matter, because what you're actually doing is at the beginning of that period, you're agreeing on the 100,000 million or whatever miles, right? And then whether you use them or not, and you get them back or not, or you get more on top of that or not, we're still agreeing on that original number. Now, if you get more on top, then you can create a new program, but in essence, that will not change the current contract that you have with us.
Perfect, Sebastian. That was all for our listener questions that we had. I'm sure there's going to be more questions after people actually hear the episode. So, Sebastian, I know we're going to have a link to your MileProtection, the waitlist, and all that. It's going to be the BoldlyGo specific link, so that anyone who signs up through there, they get the first 2 months basically for free, so they get that extended contractual time frame. But in general, where can they kind of follow your journey, MileProtection, throw out the website, all those different things? Again, we'll have the link, the waitlist specific link as well for BoldlyGo, but where can they connect and learn more, do their own research as well?
Sure. So the website, I would say it's the main place. I'm not big on socials. This may need to change that, right? I have an Instagram that I never use, and same thing with Facebook and Twitter. You can find me on LinkedIn, and it's S Bigatti, right? Or I'll also give my WhatsApp if you want to share it with your private group as well, in case they want to reach out to me. Also, probably if you want to reach out to me directly, Sebastian at MileProtection is the best way, and happy to try to answer any questions that you may have.
Awesome, Sebastian. This has been fantastic. Very interesting concept. I'm really interested to learn and hear the journey more and see kind of where you guys go from here. I do plan to sign up for the wait list, and I am thinking there's value in protecting my Japan Airlines miles, since I have a good chunk there with that transfer bonus, and kind of just seeing how things play out with that. I mean, will they devalue? I have no idea, but it doesn't hurt to get that protected, and I can also relay my experience as well with the listeners through experiencing it myself. Before we wrap up, any final thoughts at all? You've shared a lot of really great things, pros, cons, everything in between. Any final thoughts for our listeners before we wrap this one up?
Maybe just to wrap up, this is a very novel idea. It may not be perfect at the moment, at least. The idea is to get as much feedback as possible so that we can make it better for everyone and useful once we launch. So again, please reach out with any constructive feedback that you may have, and hopefully this is useful for quite a few people.
I will use that to make a plug for our BoldlyGo WhatsApp community, which is a great place with a few hundred people in there. We have some other celebrities, I'll say, that are in there that have their own podcasts and blogs and other things that lurk in the shadows at times. I know you mentioned your WhatsApp. If you want to be a part of the community, or anyone listening wants to be a part of the community, feel free. But if you want to as well and get some direct feedback from listeners there, feel more than happy to. But Sebastian, I really appreciate your time today and really being transparent on the things that you are working on, what's to come, what to expect. Again, I find this is pretty revolutionary, and this is the Revolutionizing Your Journey podcast as well. And so thanks again for being on the show today.
Thank you very much for having me.
And for the listeners out there, if you enjoyed the show today, be sure to follow us on all the social media platforms. Be sure to connect with Sebastian, and specifically the waitlist you can sign up for. You can actually notify Sebastian and his team of which points you would be interested in insuring, what airline, what bank. All those different things are available through the waitlist process as well, and you'll be able to see their progression over time. Make sure to follow us on our newsletter as well, our private Facebook group, and keep in mind, if you are not in the WhatsApp community yet, the only ways to get through or get the link, I should say, are through our Facebook group or through signing up for our newsletter. As always, don't forget to like, share, subscribe, tell your friends, and we will see you on the next episode. Take care.